Hello, and thank you for tuning in to the MacDesk Floor Report for Thursday, September 29th. I'm Rebecca Darst from the MacDesk, giving you the full market setup here from the trading floor. We're in rally mode right now, up 227 points. That's slightly off the highs, on a bevy of bullish data points that have helped the market to claw back some of yesterday's late-day skid. The third and final estimate on second quarter GDP was released before the open and included a revision up from 1% to 1.3%, which was a little better than analysts had expected. At the same time, weekly jobless claims came in below a reading of 400,000 for only the second time in the past 6 months. The data readings seem to support what was already a relief rally for stocks, but analysts we're speaking with this morning are roundly skeptical of the jobless reading. Even the Bureau of Labor Statistics seemed to put a bit of a disclaimer on the data, saying the drop in new claims was due to seasonal adjustment factors, and our analyst contacts are expecting a correspondingly higher reading for next week as a result. They're also talking about last night's comments from Ben Bernanke, who spoke in Cleveland, but made bigger waves as he spoke with unusual candor during a casual Q&A session after the speech itself. Bernanke called the current jobs climate a national crisis and pointed to the structural implications of the nearly half of the current unemployed in America who have been out of the workforce for 6 months or more. In any event, traders have put that concern on the back burner for now, and we're seeing leadership in the S&P coming from financials, with all subsectors trading higher. The ongoing crisis in Europe has remained very much front and center in the market today. The euro-dollar cross has found some support this morning right around its 10 and 15-day moving averages in the 136 area. This after Germany's parliament approved the expansion of the European Bailout Fund, the EFSF, by a decent margin. Passage of the vote was largely expected, but the margin of 523 yeahs and 85 nines was significant because Angela Merkel did not have to spend a lot of political capital making concessions to opposition parties to bring them on board with the plan. Yields on Greek 10-year government debt fell for a third straight day and narrowed their spread over Germany's debt. The volatility index is resuming its pullback today. VIX down about 7% right now at just over 38. We continue to see option traders loading up on protection on these momentary pullbacks in the VIX. This morning we saw a large gain in put side open interest in the emerging markets ETF, that's ticker EEM. And the fund's heaviest allocation is to companies in China, South Korea, and Brazil. EEM is up 90 cents at 37.36 right now, and this morning's put side open interest rose by around 200,000 lots. No calls were added. Traders were positioned in EEM put spreads as low as $30 in November and buying naked puts at the $25 strike in December, which looks a lot like protection against a global slowdown for us. For additional market insights, be sure to check your inbox for the midday at 1 p.m. The MacDesk would also like to send a very special Shana Tova to those celebrating Jewish New Year 5772. And for now, that's it from me, Rebecca Darst, for the MacDesk Floor Report.